I think it is very impressive that we are seeing an increase in the luxury contract, but still, we'll take it. It's steady, it's respectable. Let's just appreciate what we can while it's here. This is fantastic. Welcome to this week's look at the state of the New York City real estate market, where I take a look at the luxury market, the Manhattan market, and the Brooklyn market. I do it because I want you to be informed. It never hurts when you're a consumer to be informed. Welcome to this week's look at the state of the New York City real estate market. This is for last week, March 27th to April 3rd. We're going to be taking a look at what went on in the luxury market, the Manhattan market, and the Brooklyn market. I just want to say that if you are an active buyer or seller in the New York City market, this information is definitely going to be very helpful for you to have. We're going to be taking a look at each sector of the market, the luxury market, the Manhattan market, and the Brooklyn market. After I finish that, I'm going to kind of sum it all up for you and let you know my thoughts about where we're at, where we seem to be going, and some really good strategies for you if you're a buyer or a seller. If this kind of information is helpful to you, please subscribe. You can ask me questions by posting them below and I'll answer them for you. And also, if you think this would be helpful to someone you know, then please feel free to share these videos. Okay, we're going to get started now. We're going to start first with the luxury market. There were 34 contracts signed last week at properties that are priced at $4 million and above. That is 2 more than the previous week. Condos outsold co-ops 23-3, and there were 8 townhouses in the mix, including the top 2 deals of the week. So we're just going to get started right away on that. We're going to talk about first the number 1 contract. It was a townhouse at 7 Sutton Square. It was asking just under $30 million. It's been on and off the market since 2016. It started at almost $40 million back then. It is a 5-story Georgian-style mansion. It's 33 feet wide. This is considered a very wide townhouse, and it is pretty rare. So it has almost 10,000 square feet. It includes 5 bedrooms, 8 bathrooms, and an elevator. It sits on the Sutton Square gardens, which are run along the East River, and the gardens are surrounded by other townhouses. So there are 12 townhouses that surround Sutton Gardens. It's really a lovely little enclave. It's very private. It's like having your own kind of private park. As you enter the house, it has a very dramatic entrance. It has a double height rotunda, a sweeping staircase. The 4th floor features a 33-foot wide primary suite. It overlooks the East River. It has a fireplace and a large dressing room. There's a rooftop terrace with a large seating area and a grill, an enclosed solarium-style wet bar, powder room, and open city and river views. The sellers are the Wildenstein family, famed art dealers. They purchased the house in 2008 for about $32.5 million. The annual real estate taxes, if you're curious, are $146,503. The number 2 contract was 14 East 69th Street. It was asking $26.5 million, reduced from just under $30 million when it was listed in March of 2021. This is a 5-story, 30-foot wide house. It has a little over 13,000 square feet. It also has an elevator. The ground floor is a medical office space. The 2nd and 3rd floors are the owner's duplex, and the top 2 floors have been divided into 4 one-bedroom apartments. The annual real estate taxes on this home are $192,101. Now we're going to take a look at the quick stats for the luxury market for last week. Total weekly asking price sales volume, 262,455,000. Average asking price, 7,719,265. Median asking price, 6.2 million. Average discount from original ask to last asking price, 11%. And days on the market, average days on the market last week, 465. Okay, that's it for the luxury market. This increase in contract activity is being reflected also in the Manhattan market, which we're going to talk about next. Okay, so here's what's going on in Manhattan for last week. We saw the supply for the week, 400, that is down 7.2%. The contract signed, 272, that's up almost 17%. Off-market, 137 off-market properties, up almost 4% for the week. If we look at the monthly look, however, we see a sort of a little more information on this. I think is a little more helpful. The supply, 1,867, up over 31%. Contracts signed, 1126. Wow, that is great to see. That is up almost 30%. That's a big jump. And off market, 522. That's almost 21%. So you have to wonder, in the height of the spring market, why are sellers opting to take their prices off the market? Let's take a look at the market pulse. We continue to stay in this neutral market. Supply is up a bit, contract activity is up a bit, keeping us in a kind of a neutral place. And wow, look at this Manhattan liquidity pace chart. This is a chart that is a 30-day kind of moving window of contract activity for the Manhattan market. 1,126. I know this was just, this is always moving. I know it is up even a little bit from this snapshot. By the time you're seeing this, it will be up even more. 1,100 is right around our sweet spot for this time of year. If we're seeing contract activity at 1,100, especially considering where we've been in the last few months, this is fantastic. So we are definitely seeing an uptick in the liquidity, and that is great. If we look at the supply, the Manhattan inventory is growing, but it is growing at a kind of a slow pace. The demand, as far as the demand goes, the pending sales are rising, but they're still not quite at the 21, 22 levels. But they are above earlier years. So this is interesting. 21, 22, those were kind of crazy years. They were catch-up years for us after COVID. So what we're seeing now is a little bit more typical of what we would see in the spring market. The new listings, the cumulative number of new listings remains kind of a continuation of this lower pace. We're seeing them coming on, but not in a huge way. As you saw with the liquidity pace, if we're looking now at this cumulative total number of contracts that have been signed in 2023, it remains in this kind of middle ground between 2019 and 21, 22. I love this market index because we're getting a little more real time, or at least more current information than the typical market reports that are put out. That data is quite old by the time those reports are released, these quarterly real estate market reports. So I love this Manhattan Market Index because this index is suggesting in a kind of a strong way that the prices are really off their lows. And I think that this is a great chart for buyers or sellers because you can see kind of in a little more real time, current time, you can see where the market is at I think we can also get a bit of a forecast of where we might be headed. That is it for the Manhattan market. So after Brooklyn, I'm going to kind of sum it all up for you about where this market is at in New York City right now. And I will also share some really great tips for success for buyers and sellers. I would sum up where we're at with Brooklyn to say this is a bit of a pokey market in Brooklyn right now. Pokey in terms of new listings and pokey in terms of contract activity. Certainly as you compare it with the luxury market and the Manhattan market. We're going to get into the details. You'll see what I mean. If we take a look at the 1 week supply number, 199, that is down a little over 16%. Contract signed, 170, up a little over 10%. And the off market, wow, a change, an increase for 134 properties, an increase of 219%. That is kind of what I'm talking about with Brooklyn. Take a look at the monthly supply in Brooklyn, 860. We see that is up almost 21%, but still not a lot when you consider that this is the kind of the meat of the spring market. Contract signed 613, also up about 23%. Off market 297, up almost 33%. If we take a look at the market pulse chart, we see that just as with Manhattan, in Brooklyn, we remain in a neutral market, supply and demand being essentially equal. However, everything feels a little less enthusiastic in Brooklyn. Now, is that because for several years we had so much transactional activity in Brooklyn, are buyers and sellers just taking a little break right now? I guess that remains to be seen. If we look at the liquidity pace chart for Brooklyn, 651. This is definitely, we're on the rise, but these aren't huge numbers of contracts being signed, but still, we'll take it. It's steady, it's respectable. Let's just appreciate what we can while it's here. Supply chart shows that the Brooklyn inventory continues upward. It's kind of inching, as I said. And the demand, the pending sales in Brooklyn is finally higher than it was at the beginning of this year. And the new listings, we see a kind of a slow pace of inventory growth, where we're seeing it reflected the most as in these continually lower weekly new listings. But again, this may not be a bad thing. This may just be Brooklyn catching its breath. If we look at the cumulative new supply, we see that there's a kind of a gap in the total number of new listings versus last year, and that appears to be increasing. The contracts signed have risen to their highest level since last summer in Brooklyn, and it seems like, it was a bit of a slow start. Buyers do seem to be more engaged. We're going to have to wait and see how this plays out over the next month or month and a half and see where we end up in Brooklyn. But for right now, things seem slow yet steady. If we take a look at the Brooklyn price action, we can see that the pace of decline in the price action seems to be slowing. If you look at the Brooklyn price action from a price per square foot, you can see that, again, this is, we're kind of holding steady. There's no big declines here on the horizon. That is it for Brooklyn. And I just want to say that, again, with all of these macro factors, all this noise going on in the world, we are still seeing the New York City market holding steady. In Manhattan and in Brooklyn, we're seeing a pretty neutral market. We're seeing a lot of parity between the supply and the demand. We are definitely seeing an increase in contract activity in Manhattan to a level that historically this time of year, this is right where we should be. So that is the sign of a healthy market. And, boy, we'll take it because, we like that kind of steadiness in this market. Seems that we are not as impacted by these macro factors going on. Brooklyn, slightly different story, but again, Brooklyn has had such a huge run in the last few years. It's very possible that everybody's just kind of catching their breath. But we can see that the buyers are definitely re-entering. We're seeing that contract activity coming up, and from a price action standpoint, both Manhattan and Brooklyn are holding steady. We're not seeing big declines in value. You can see from the luxury market that we are definitely seeing strong contract activity in that market. We saw a rise in activity in the last few weeks. Here's an important takeaway if you're a buyer. You may have some leverage depending on the situation, but don't assume that you've got huge leverage. Clearly, you can see from the charts that I've shared with you and the data that I've shared with you that we are not seeing huge negotiability in the prices when these deals are getting made. If you're a buyer, you don't want to assume that you won't have competition or that you're going to get 10% off the asking price. I want you to be successful. And so proceed with caution. You can test when you make your offers. Just, be aware that you very likely have competition at this point, and that the sellers, if they don't like what's going on, they are simply taking their places off the market for the moment. But the people who are actually active sellers are kind of holding steady, and they're finding that they are getting pretty close to their prices. Sellers, a takeaway for you in this market, you want to still be very careful about your pricing. You want to price very close to where you think, to what you think the market will support for your property. You want to be sure that you're not out there at a price that isn't working for you. So if you've been on the market 30 days or longer, you really should be looking to adjust your price. I mean, you can always take your property off the market if you want to, but if you are serious about getting your property sold in this market, don't wait too long. Make your price adjustment and try to get your deal done while we are still in this very strong spring market. As I've mentioned before, this market's going to go through till, barring any bad news, we should be seeing this market continue right through May, possibly into June. You have any questions? Let me know. Please post them below. Please subscribe. Please share these videos if you think they'd be helpful to someone. I want to thank the Olshan Report and Urban Digs for their amazing reporting. The research they do helps me to help you to make great decisions. I'll be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.